Super excited about the numbers we're seeing this week. Please feel free to chime in. It's looking really interesting here. I've updated the averages so we can look at those as well. So let me see if I can zoom in just a smidge more. One sec for these old eyes of mine. Okay, March 6th, we've got a pretty nice increase. It's always good to see the numbers go up here in total active listings from 1,390 last week to 1,423. But don't get too excited. Here's what the average is. This is where your conversation is. When people are like, there's nothing, you're correct. We are well below the average, and this average is just since August 1st. This does not include last year's numbers. So please be aware when you're having substantive conversations with your clients, this is what you want to be talking about. You do not have to be super experienced in real estate sales to know what's happening in the market. So definitely well below average, but good to see that number pop up a little bit. Total new listings in the last 7 days. Definitely some of these are why we're seeing a pop in this number here. So we're seeing an increase here, but yeah, that's good to see, like almost 80 exactly, new listings in the last 7 days. Love to see that. Total pendings is up just a smidge. I know that I had clients not get a property over the weekend in multiple offers. We're still seeing some craziness out there and what people are offering. But good to see that the pendings are up as well. This is a big number. I think we're just seeing, here it is, March. This is probably what was closed or went under contract at the end of January. Let's pop over here. So we didn't see that jump in January, but we did see a jump at the beginning of, or sorry, the end of December. But I'm trying to look here. Even in these numbers, like what was hitting the market around this time is probably what we're seeing here in our closing number. We were still seeing stuff, fly in multiple offers. So 206, which is up, almost 80 over last week. Dip here, days on market, that makes sense. Of the decent ones that are coming on the market, they're going really fast. But still 61, the average is 43. Look at the number back here, August 1st, 26 days on market. Hello. So we're still seeing a substantial difference. Holding in strong there, average price around 255. This is, again, I know there's some new people on the call. The numbers that I'm pulling for here is Allegheny County single family. So when you go into MLS and you're pulling that criteria, this is just Allegheny County single family. So if you want to pull all of Allegheny County or whatever, you're going to see distressed properties, you're going to see condos, and I feel like that skews it a little bit, but it definitely could be the minutia you want to dig into if you're going to start pulling data. If you want to start farming condos or farming multifamily, this would be the criteria that you could start pulling and tracking data. Number of price reductions, holding steady at 132 here. This I think is interesting. Sales price to list price ratio, it's up quite a bit. A percentage and a half, like 1.5. That's telling us that the properties that are getting listed are getting closer to selling for sales price. Look at what it was in August. Hello? 100. Sell price to list price, right? That means no price reductions at 100%, versus this down here is showing that about 3.5% is selling, or properties are selling 3.5% less than what they were originally listed at. So that's telling us there's still areas in there to get price reductions, right? Overall, Allegheny County single family, there are some price reductions to be had. And I think that's because we're seeing properties, listed too high. Something to factor into here, which is just like the wild card, is what happens when a property goes under contract and then they've got some sort of concession that they're going to make due to appraisal or inspections. We can't possibly know that. We're not going to get down into the nitty gritty in those numbers as to whether or not there was a concession. But that's a factor in too. It might not just be price reduction because of days on market. It could be price reduction due to appraisal or inspection contingencies. Nod your head if you understand what I'm saying there. Okay, good. Number of expired, 63. That just jumped up. I mean, when you consider in the scheme of all of the active listings, this is still telling us that people are not selling. There's still some houses that are sitting out there. What I love about that number is, are you thinking about an investment property? Are you watching to see what's been on days on market, and what might be ripe for an offer? I look at these, and sometimes when you look at the new, obviously we can't know what's in people's contracts, but we know that it can't be listed for more than 365 days. That's the contract that I put in, but then, after 180 days, like when are these expiring? Am I making sense there? Is like, if you're looking for an investment property, something to be tracking here might be, how long has this been days on market? Have you seen it? And if you're looking for an investment property, are you going into those ones that have been 30, 40, 50 days on market? They're going to be ripe for an offer. Also, I didn't do an average on that. Let's see. Let me move my little box here. So average is 53. So we're still above average there. Last two boxes here, we have one more agent in the MLS, but look at this number, 8608. Look where we were in August, 8669. We are 61 agents shy in the MLS. That's a drop in the bucket compared to, when we're talking about 8,600 people. But this is what we're going to see. I'll be shocked if we don't start to see these numbers go down even further, especially if the spring market is not what it was last year and agents didn't cut expenses and agents aren't doing their lead gen, and agents aren't, getting belly to belly with their clients. So really interesting number there as well. Interest rates are still hovering in the sevens. Nobody thought that that's where we could be last year. We are still at historical average, in the sevens. So, the script is, what's the script, Allie? You remember the script?
I hate
Date the rate.
I hate
Yeah.
me. Date the rate, marry the house.
Somebody added something to this and I saw it on Facebook. I was like, they stole my line. It was divorce the rental, date the rate, marry the house. And I thought that was interesting. Yeah. Divorce the lease, divorce the rental, date the rate, marry the house. I know I repeat myself sometimes in these, but there's always new folks, is don't let the interest rate conversation deter you about, where we are in the market. It's just that the people that are looking right now have been looking in a market that was like anywhere from 2% to where we are now. So their mindsets are a little cuckoo. That was not a sustainable market. That was simply due to COVID and not normal. We're definitely entering a balanced market, but we have that additional wild card of this. No inventory. So that's why we're staying in a seller's market right now. Interest rates be darned. Those buyers are still going to buy. But yeah, the inventory's, kicking our booties out there. Does anybody have any questions or comments of what they're experiencing out in the wild?
No. 8 of those expired were mine, just so you know.
The what?
8 of the expireds, those were mine.
Oh, bless your heart. Bless. I'm going to add you, Ken. Do you want it on your KW email?
Yeah, that'd be fine.
Okay. This is just a visual. Please don't edit this. Like I need to change this to viewer, but this is a way to just take a look and visit this anytime you want. I will add you to Bianca.
She's Bianca. Yeah. Oh, you got it. Ooh.
I'm in, girl. All right. So that's just so that you guys can see this, or if you want to pull this up when we're doing this on Mondays, you can take a look at this. But again, interesting numbers. I say it every week. I sound like a broken record, but I'm just a numbers nerd. I just, this is good news to see these going up. It's just still incredibly competitive. And somebody asked me whether you guys want to know this or not. I'll share it with you since we're here. Is how do you qualify for luxury? And luxury is 4 closings in a 2-year period that is 3 times your MLS average. Now, this average right here, again, is skewed because it's just Allegheny County. So if you included all of West Penn and did like an average, closings or whatever, multiplied times 4. I'm sorry. What does I say? 4 times.
3.
My math is not mathing today. What did I just say?
You said 3 times the MLS.
3 times. Yes. 4 properties, buy or sell side, 3 times the average of our MLS to get that luxury qualification in a 2-year times. There's too many numbers. 2 years, 3 times, 4 properties. 2, 3, 4. I'll remember that now. Any other questions? Okay, you guys, thanks for showing up as always. Appreciate it. I hope this info helps when you're having conversations with your clients. Feel free to lean back into it and look at the numbers deeper and just see where you see trends, and hope to see you guys next Sunday. Have a good day.
Thanks, guys.